What is going on, you guys? In this video, we are going over the best 3 stocks to buy now. These stocks have huge potential to come. You will see why in this video. We're going to do a quick rundown of who these companies are, financials, and some great news regarding each of these companies, so stay tuned. And I hope it is not too much to ask for an early like on this video, subscribe if you aren't already, and turn on those post notifications to be notified every time I post a new video. As always, I would appreciate the support so much. And always remember, I'm not a financial advisor. I'm not telling you how or where to invest your money. I am here and only here to post my own thoughts and opinions with any stocks I may do a coverage of. With that being said, let's get right into the video. So the first stock we are talking about is Avid Technology, ticker symbol AVID. On New Year's Eve, they closed at a price of $15.87 a share, and they were up almost 13%. For the past 5 days, they are up 14%. As you can see, on December 24th, they were trading for almost $14 a share, and this was going all the way until December 30th when they popped up to $14 a share. And then on New Year's Eve, that's when they hit $15.84 a share, 1 hour after opening bell. Avid does have a market cap of $701.58 million. Now, a quick background of who Avid Technology is. Avid is reshaping the entire media value chain with powerful technology for creating, managing, storing, distributing, and monetizing film, television, and music. Their tools and platforms empower more than 1 million users and thousands of media enterprises to tell powerful stories and build better businesses. As you can see, all their products range from asset management, audio, community, graphics, live sound, media central platform, music distribution, notation and scoring, pro mixing, and much more. Now we're here looking at a presentation on their Q3 2020 performance. For their subscription revenue, it grew 73.9% year over year. Subscription plus maintenance revenue was 11.6% year over year. E-commerce revenue was 41.2% year over year. Adjusted EBITDA was 51.2% year over year. And free cash flow was $15.5 million. Now, obviously, content creating and the media industry is a growing one, and this company is also driving their growth with new innovative product releases from Q3. As you see, they have their Media Central Collaborate application, Avid Connector for Adobe Premiere Pro, enterprise subscriptions for Media Central. And they do have more future innovation in the works, with some major releases expected to be unveiled in Q4. They are doing absolutely amazing with subscriptions, you guys. They are just growing each quarter. Continued robust growth of cloud-enabled software subscriptions, up 58% year over year, with net increase of approximately 27,000 paid subscriptions in the third quarter. Revenue does come from subscriptions and maintenance like we mentioned, and we can definitely see strong growth in their subscriptions each quarter. And with their maintenance, it is steady but consistent. Now their total revenue is also steady but improving, as we can see. Now for their balance sheet as of 9/30/2020, they do have $49.1 million in cash. However, they do have $204.1 million in long-term debt, just something you want to take note of. Now, some great news on this company is that they received a price target increase to $18 by analysts at B. Riley on December 31st, 2020. Avid Technology had its price target lifted by research analysts at B. Riley from $13.50 to $18 in a report issued on Thursday. The brokerage currently has a buy rating on the technology company's stock. B. Riley's target price would suggest a potential upside of 27.57% from the company's previous close. In my opinion, this company does have great potential because audio and video is widely used in live events, concerts, and so much more. But that is also where the risk comes as well, because we don't know when there will be concerts and public events that will take place as they used to before the pandemic happened. So keep that in mind. However, I do think this company has strong potential, and it does show in their subscription growth as more and more people are using their products. The second stock we are talking about is Acoustic Technologies, ticker symbol AKTS. They did close at a price of $12.23 a share on December 31st, and they were down 1%. So as you could see on the opening bell of December 31st, they did open at $12.54 a share, and that's when they dipped down and they rose up again, and then it started to look like they were going on a downtrend. However, if we look at the 1 month chart, they are up 62%, which is absolutely great. And this company does have a market cap of $472.42 million. So who is this company? company. Acoustics is a high-tech BAW RF filter solutions company that is pioneering next-generation material science to address the market requirements for improved RF filters, targeting higher bandwidth, higher operating frequencies, and higher output power compared to incubate polycrystalline BAW technology deployed today. Now, this company plans to service the fast-growing multi-billion-dollar market of device OEMs, network providers, and consumers to diminish front-end phone heat, battery drain, and signal loss, all considered to be directly related to current RF polycrystalline filter technology's limitations. Now we're here on their product page, and we can see that their RF filter products allow high frequency, ultra wideband, and high power operation across multiple applications including 5G mobile and infrastructure products, commercial and consumer Wi-Fi access points and devices, phase array antenna solutions, and other RF markets. So the fact that this company also serves products for 5G is absolutely great because the 5G industry is huge and is expected to grow at insane levels this year and many more years to come. So now we're here on Acousti's recent presentation, and like we just mentioned, they design and manufacture patented XBAW radio frequency filters for the 4G, 5G mobile, and network infrastructure, Wi-Fi, and defense markets. And if we look at this chart here on the RF market dynamics, we can see that the RF filter growth per device is a growing area. Now we're here looking at the target end markets, and we can see that for 4G and 5G mobile, the 2024 filter market size is expected to be $8.4 billion, which is a high volume market. Now for the Wi-Fi, network infrastructure, and defense, it is expected to be $2.2 billion. Now, like we just mentioned earlier, this is going to be a huge thing in phones because mobile device RF complexity is increasing. If we see here multi-band, today greater than 40 bands. Next generation up to 100 bands. More bands drive greater coexistence filtering needs. Multi-mode next generation 5G devices reuse 2G, 3G, 4G spectrum, expanding high band spectrum. So Acousti's patented RF filter technology supports ultra-high band spectrum in smartphones, enabling faster internet speeds. And what are the benefits for these RF filters? Thermal performance, improved power handling, increased heat removal, high purity piezoelectric, high frequency performance, turntable stress, flexible doping, ultra wide bandwidth, compact solution size, standard SMT process, wafer level packaging, enable integration, unique and flexible, and low-cost platform, which it does bring mobile benefits with improved power handling, high performance, wideband, Wi-Fi benefits, improved power handling, high performance, wideband, compact footprint, and massive MIMO and small cell benefits, U-filter with high power handling, high performance, and SMT manufacturability. Okay guys, now their financials are okay for the most part, they're not too bad, but there are some red flags and I'll go over that with you right now. So as you can see, their revenue has been increasing each year, which is extremely good. However, their gross profit does look like it is getting worse, as well as their operating income. They're not having any income coming in from their operations. And we could see that also reflect here on their net income. But again, I do believe that this is a growing company still. They still have a lot of potential, especially in the 5G industry. So we just got to make sure we keep an eye on for that. Now their balance sheet is pretty good. As we can see, as of 6/30/2020, their current assets are at $46 million. Current liabilities are only at $6 million. And cash on hand, they do have $44 million, while they only have $23 million in debt. So this is something we want to see. So overall, they're pretty okay financials. I hope to see some profitability these next years coming up, especially in the future, because 5G is absolutely a booming industry. Now for some great news on this company, speaking of the 5G industry, Acousti's did receive their first 5G mobile orders for XBAW filters from new Tier 1 RF solutions provider, and this was announced on December 16, 2020. Orders for development of 2 XBAW filters for 5G Wi-Fi coexistent devices targeting multiple OEMs and ODMs. New customer is company's third 5G mobile device customer. And while this is their third 5G mobile customer, the company is currently working with 2 other RF front-end customers to develop 5G Wi-Fi and ultra-high frequency 5G Wi-Fi coexistent filters. So obviously this is extremely great news, and they are already heading on the right path. The CEO of Acousti's Jeff Shealy did say, while we remain focused on our growing success in the Wi-Fi CPE and 5G network infrastructure markets, we are excited about the increased interest in our patented XBAW filter technology for mobile devices. The 5G mobile market represents the largest opportunity for acoustis moving forward. Our early customer orders from both Tier 1 and Tier 2 companies for 5G mobile filters validates the strength of our growing XBAW filter portfolio. And this is true as more and more 5G mobile devices are coming up, they will grasp a lot of attention. So they're in a great position and in a great market. So I believe this is an awesome opportunity right here in Acoustis Technologies. Now the last stock in this list is Bcov, ticker symbol BCOV. I did cover this stock in one of my last videos called Best 2 Stocks to Buy Now, which was on Bcov and eHang Holdings. Now Bcov did close at a price of $18.40 a share on December 31st, and they were up 0.38%. For the 6 months, they are up 137%, so they've been performing pretty nice overall with a steady nice uptrend for the past 6 months. And they do have a market cap of $732.43 million. Now, quick disclaimer, I do hold a long-term position in this stock because I do see very strong potential and high growth opportunities for this company as they are in the fast-growing media and content creating industries. So quick background on Bcov. Since 2004, Bcov has been helping customers discover and experience the incredible power of video through its award-winning technology, empowering organizations in more than 70 countries across the globe to touch audiences in bold and innovative ways. Bcov achieves this by developing technologies once thought impossible, providing customer support without parallel or excuses, and leveraging the expertise and resources of a global infrastructure. Video is the world's most compelling, exciting medium. Bcov is a video that means business. And if you go to their homepage, you can see that they have some of the largest customers: BBC Worldwide, Adobe, Johnson & Johnson, Ford, HubSpot, and much more. And they do provide these services to media broadcasters, marketers, arts and entertainment, retail and e-commerce, internal comms, and sports. And the products that they offer, they do cover video essentials, video solutions, and video add-ons. Bcov's financials are pretty decent and there is some strong improvement in some areas. As you can see, their total revenue has been increasing each year, which is definitely something we always want to see. Gross profit, we could see some increased movement as well. But in their operating income, it is in the negatives. However, you could definitely see some great improvement each year. Now, in their net income, it does not look like it is improving each year. However, I do hope to see some improvements, and I think we can see this in these next few years because they're bringing in new customers, and I'll show you right now in their Q3 report. Now we're here in their balance sheet, and there's going to be a red flag here. As you can see, their current assets are at $80 million, while their current liabilities are at $95 million. However, on the bright side, they do have more cash on hand, which is at $30 million, and their total debt is only at $17 million. Now we're here looking at their Q3 report, and we can see that their average annual subscription revenue per premium customer was $89,000 in the third quarter of 2020, excluding starter customers who had average annualized revenue of $4,300 per customer. This compares to $84,500 in the comparable period of 2019. Their recurring dollar retention rate was 101% in the third quarter of 2020, which was above their historical target of the low to mid 90% range. Now, speaking of customers, like I just mentioned earlier, new customers and customers who expanded their relationship during the third quarter include Bristol Myers Squibb, Coupang Corporation, Dar Communications, Hitachi, Jack Morton Worldwide, Boston Consulting Group, Chick-fil-A, ClassPass, Football Federation Australia, Le Figaro, Lifeway, and Time USA. So this is absolutely great news that they're reeling in new customers, and more importantly, they're expanding relationships with current customers, and this tells you Bcov is trusted and is satisfying current customers with their services. Now, there has been some positive coverage on Bcov just a few days ago. As you can see here, the strength of such a business model during these pandemic days with their massive shift of white-collar workers towards remote offices, telecommuting, and video conferencing is obvious. Bcov's earnings hit 11 cents per share in Q3, nearly double the year-ago quarter. At the top line, revenues have been stable, holding between $46 million and $48 million per quarter in 2020 with no discernible COVID impact. One analyst even noted that we believe a market tailwind, BCOV's leading tech platform and strong sales execution are driving strong bookings. We believe the sales force is at full productivity. BCOV will add more channel managers this year. Management is focused on process improvements to achieve consistency and revenue retention rates. Now, Lattimore rated the stock as outperform, and his $24 price target indicates confidence in a 36% upside for the year ahead. And there were 2 additional buy ratings for Bcov with a strong buy consensus rating, with an average price target of $20.17. Now, I do believe this company is positioned for high growth these next few years. They do service markets that use video and media services. The fact that their customers are growing and they're maintaining continuous relationships with customers right now is a huge step towards massive growth, and especially because they are in the media industry, which itself is growing extremely large. Now remember, I do hold a long-term position in this company out of the 2 other stocks, and of course this is my opinion, but yes, I do see high growth and massive growth for Bcov. Well, that brings us towards the ending of this video. I hope you enjoyed these 3 stock picks. Let me know down in the comments below what you think about these stocks. As always, your thoughts are extremely appreciated. Also, don't forget to like, subscribe if you aren't already, and turn on those post notifications to be notified every time I post a new video. I would appreciate the support so much. Thank you so much for watching, you guys. I'll see you next video.